Welcome back. I'm Pratap here. Today is 3rd April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. So to access the training lessons at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on that Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course and all training lessons are available in this playlist. You scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to the training instructions I mentioned at our Telegram channel. So I provided the link to our Telegram channel in this video description. So from the video description, join at our Telegram channel. So at the Telegram channel, top of the window, you can find pinned messages. And one of the pinned messages are having all the training instructions. So learn this course according to my training instructions. Then definitely you will become a very good independent trader in the coming months time period. So please make use of this opportunity. Okay, now let's get into the performance of our HLQ zones identified in the previous end of the day report. Previous report we identified 1, 2, 3, 4, 5 high liquidity zones we identified from daily and 75 minutes time frame. And today I will be focusing on an important topic, why I am telling you not to trade in morning 9:15 1 minute candle during the intraday. Because we know the reasons also, because we've been discussing. But today we got clear examples that will tell you why we should not trade in the 9:15 candle. Actually, we did not get any trades today, but two zones are violated in the morning 9:15 minutes candle itself. That's why we didn't take those trades. And after that, we didn't get any trade opportunity in today. But one stock price came close to the second fine-tuned zone, but that is not good enough. After that, prices came down. Okay, the first one is Laurus Labs. Laurus Labs is a 75 minutes high liquidity supply zone. Actually, it is not 75. It is a daily high liquidity supply zone. So this is the rally, 3 base candles and a drop candle. And a Laurus Labs, I already explained previously how I fine-tuned, but quickly let's go through that. Let's go to the 75 minutes time frame because today we are learning an important concept. Let me show you once again what we discussed earlier. We have a drop, we have 1, 2, 3, 4 base candles and a drop, a 75 minute zone. We have another 75 rally, 1, 2, 3, 4 base candles and a drop candle. Both 75 minutes we fine-tuned with 15 minutes time frame. In the 15 minutes time frame, here you have inside the first one, you have a drop base drop. Similarly, in the second one, second 75 minutes, you have a 15 minutes fine-tuned zone. That is a rally base drop. So you have two 5 minute zones. These 5 minute zones, again, we need to fine-tune with 5 minutes time frame. Look into the upper one. Here we have a rally candle. So this is the rally. You get some more hidden body also right here. So that's why it is a medium size candle rally. After that, 3 base candles, 1, 2, 3, then drop candle. So this is the area we planned our fine-tuned 5 minutes zone. We are planning our trade. But before that, there is one more 15 minute zone here. And this 15-minute zone price structure is not really convenient here. Entire 15-minute zone, this entire 5-minute zone will be occupied. You consider rally 1, 2, 3, 4, 5, 6 base candles and drop candle. Whole zone is 5-minute zone. So fine tuning is not difficult. Maybe you need to fine tune the entry, but luckily what happened recent time, I mean after the 15-minute zone creation, there was a 5 minutes high liquidity zone we identified here. Rally base drop. This is the one currently holding the prices. Rally base drop. Again it is tested. Second time. Third time. Again here, once again it is tested. But today, because high liquidity zones, what is the trade plan? Until the zone violated, we keep on taking the trades. One day it will be getting expiry period. That day we get stop loss. We will okay with that. Because earlier we enjoyed the profits. This is how we plan our trades in HLQ zone. 5 minutes fine-tuned high liquidity zone. I'm talking about 5 minutes fine-tuned high liquidity zones. This is the strategies we apply. We keep on taking trades. Because sometimes HLQ zones, 5 minutes fine-tuned HLQ zones may give you some 7 or 8 trade opportunities. Sometimes maybe second trade or third trade itself it may violate. Anything possible. But we want to enjoy the profits. One day we know it will hit the stop loss. That day we will accept because we enjoyed the earlier profits. And definitely today also we will be planning. But see today what happened? Market opened with a gap up. This is a 1 minute, this is a morning 9:15 5 minutes candle, but let me go to 1 minute candle, you get clarity. Now look into the morning 9:15 1 minute candle. See, market opened here. Let us assume you kept some pre-market orders or something before market starts. Let us assume in that pre-market your trade is executed, just assume. Once the market opened with a gap up here, then what is your stop loss? Maybe your stop loss is somewhere here. So your stop loss won't be executed. Market opened above gap. After that you see it was moving up, moving up, moving up. So your loss is increasing. Maybe if your loss is somewhere here, it could be maybe let us assume 2% risk. If it is moving up, maybe 3% risk. Opened with 3% risk. Market opened with 3% risk. So that means you need to exit your trade at 3% risk. Your stop loss won't be triggered because your stop loss is somewhere here. It went up. Now again you have to adjust your stop loss. Before adjusting, market moved up to here. Now you will exit whatever the price it is here. Assume market exited with your stop loss having some 6% loss. What is our maximum accepted risk? 2%. But we took the trade with 6% loss. These are the major problems happen in 9:15 candle. When market opens with gap up and gap down. That's why we are not planning our trades in 9:15 candle. And also volatility is huge. Within fraction of a second, price will move up. Imagine if your trade, your stop loss is executed here, how much loss you would have got. This much loss. You are supposed to exit here, but you exited here because of the gap up. Same thing, demand zones, gap down. So these are the main reasons why we are avoiding 9:15 candle trades. Suppose market opened with gap up, but not reached. Next candle it entered here. We will take trade. After that price moved up and violated. No issues. Because like 9:15 candle, market won't go with huge gap ups here. Sometimes 1:15 candle, small gap ups will be there. That is okay. But not like this huge gap ups, which is quite dangerous. This is the main reason every intraday trader should always focus on this area. Not only intraday traders, even short-term traders also this point is applicable. Even swing traders also it is applicable. Anybody. Always they say like we are keeping trades, what we call ZTT orders. And the softwares, they will hold your orders for more than whatever the time you set. In your GTT orders, if you set 10 days, 15 days time, that will be there in the broker software. Whichever the day your price triggers, that day it will execute. Let us assume that day market opened with a gap up and your entire daily zone is violated. Your MIT trade you are planning with that huge gap up. Imagine your loss. People feel these are the advantages, but actually in experience you will learn these are going to be a big disadvantages for you. This is the difference between theory and practical. Okay. Because people say, I'm a busy person, I don't have time, I can't place trades in the live market. Before market, I want to place my orders. People say very well. All these facilities are available. As long as market doesn't open with a huge gap up, your trades will look like successful and you feel very happy. But one bad day, market opens with a huge gap up. That day, price went beyond our stop loss value. See what kind of losses we get. Can you imagine? Trading means you should be always careful. You should focus at least on the trade execution. Execution means at the time of placing the trades or at the time of profit booking. Your focus should be there on your stocks. Okay. So anyway, so this is what happened to Laurus Labs. That's why it is not a valid trade for us. This high liquidity zone, today it got the expiry, but we have a fine-tuned zone here. Prices came close to this zone, but anyway, 9:15 you would not have taken a trade. Maybe next candle, if you would have moved up to here and came down, today we would have got a very good profit in Laurus Labs. But unfortunately, we missed a trade opportunity. Okay, next one is M&M. M&M is also same case, but it is towards the downside. This is a 75 minutes high liquidity demand zone. Sorry, 75 minutes high liquidity demand zone. Yes, rally, 1, 2, 3, 4 base candles and a rally candle. It is also having a 75 minutes supply zone also. The stock is having both demand zone and supply zones. Either side we can plan trades, but the distance is, we see, huge distance. So that's why the distance is near, either side you get trade opportunity. And the distance is huge, only where the stock is near, mostly there only you get trade opportunity. Other side mostly you won't get, because a lot of price movement is required. So here we have a fine-tuned zone. We have a 75 minutes. How I fine-tune? Go to 15 minutes. In the 15 minutes time frame, you have a drop base rally with pro gap. Here also drop base rally. Both are fine-tuned with 5 minutes time frame. 5 minutes you see here. You have drop, 3 base candles and a rally candle. But here, if I went to the 3 minutes time frame, 3 minutes or 1 minute? Let me check how I did the analysis. Yeah, 3 minutes time frame. We have a rally, base rally. Again, this is the origin. For this 15 minute zone, for 15 minute zone, there is 3 minutes origin and also fine-tuned 5 minute zone, both are overlapped. That's why if the risk is allowed, you should plan your trade and your stop loss should be below this, below the 3 minutes origin. So combining both these zones. This is how that planned. But what happened? Market went below this. In the morning 9:15, 1 minute candle. Go to the 1 minute. See what happened? Market with a gap down, it opened here. Sharply moved below. Just fraction of a second it moved below. And again moved up. This entire order flow is gone. And again further moved. That means it is no more valid. It is gone. Next candle, do you take a trade in this zone? No, you won't, because in the previous candle, everything is gone. So that way your trade is saved today. This is the reason why morning 9:15 candles we are avoiding. When these kind of issues come, generally institutions, they take their pending order flow, they cancel their pending order flow. Why they cancel? Because of some circumstances in the market. Maybe if you think maybe the reason could be the taxes imposed, the tariffs. The tariffs imposed, these are the few reasons. That is one of the reasons why Laurus Labs moved up. Tariffs are in favor of Laurus Labs. That's why it moved up. But tariffs are not in favor of M&M. That's why it went down. See the difference. So when unexpected events are taking place, at the time institutions may cancel their order flows, because they also don't want their trade should be disturbed, right? They won't take decisions every time. Just small things, institutions won't change their order flows. There is a major reason. But tariffs is a major reason. It's a serious event in the market. So that is the reason why they might have cancelled their order flows. I'm just telling you, there is a chance that they might have cancelled. They might be knowing that it is not the safest to take long trades in M&M. It is not the safest taking short trades in Laurus Labs, because tariffs are favor to pharma industry. So that's why short trades they might have cancelled. I'm just telling you, maybe possibility. As a technical analyst, we don't bother about what is happening outside. Our focus is only on the zones. If they reach the zone, we get the trades. Sometimes taking these events, institutions may try to convert that into their favor also. That way also they plan. There are 100 reasons. But this is the one, both these trades, both Laurus Labs and M&M, see how morning 9:15 candles saved our trades not to plan in these zones, because their order flow is already gone. We got a confirmation that there is no proper order flow in this fine-tuned area. Basically 9:15 candle will give us confirmation whether there is a really order flow is there or there is no proper order flow. If proper order flow, these zones will hold the prices. Price won't go below this zone. Just hold before the zone, and next candle's price enter into the zone, we get the trade and market will move. Here you may say, see, after that, after violated, market moved up. That is how institutions are playing with us. See, this is from here, violated and moved up. See, Laurus Labs, supply zone is violated and moved down. See here, and then moved down. This is the institutional play. Why? Because they got a lot of liquidity here. Once they get liquidity, they might have gone for a fresh short trades here. Similarly, M&M also, they might have got a lot of liquidity here. Once it is violated, they might have took fresh long trades here. Finally, they have to book the profit. That's why wherever it started, almost same place it came here at the end of the day. And remaining stocks, so we didn't get any trades. Look into the BSC. This is a daily high liquidity supply zone. Rally base drop. And this is having a fine-tuned 75-minute zone. Here there is no proper structure, but here we have a structure. 75-minute zone. You see rally, 2 base candles, and then a drop candle. See, these are the medium-sized candle. Rally, 2 medium-sized candles, and a drop candle. That's why I drawn the zone. But inside this, there is no proper 15-minute structure. Look into this. There is no proper 15-minute structure. Maybe some of you may consider this is a drop-based drop. No. See how big this candle it is. Maybe failed ERC. Or if you are convinced this is a medium-sized candle, then this is not a leg out. This is a medium-sized drop candle. You can't use this as a leg out. So either way, because this candle length is almost a little, even little shorter than this candle. And if you consider this is the imbalance, where is the continuation? Because there is no continuation, maybe it is not accurate. So that's why I didn't plan, I have no interest planning trades in this area, inside this area. Anyway, prices also did not enter. Why I didn't plan any interest show, did not show? Because I know this will be violated easily later. Next one is Indus Towers. This is also a daily high liquidity supply zone. So this is also not having any proper order flow. Software identified drop and 6 base candles. 1, 2, 3, 4, 5, 6 base candles and a drop candle. Previously there was some order flow somewhere here, but that is wiped out in this candle. That means they are gone in this candle. So that's why here no proper structure. If you go to 75 minutes, you will understand. There is no proper 75-minute structure here. Maybe here you would have drawn a zone, but this zone is gone. Maybe you may consider this as a failed ERC, leg in, base, drop. You could have drawn this 75, but this is gone. This is pierced. See this candle, it's gone. So that's why here we can't plan a trade. But here you have drop, base, drop. Go to 15 minutes time frame. See, in this pierced zone also, in case if anybody planning pierced zone strategy, no order flow here. So that's why you can't plan even pierced zone strategies within the area. But here 15-minute structure, I am not happy with these candles. See, so many base candles here. All these base candles, so many. So the zone might be violated easily next time. So I am not comfortable with this zone. So no trade plans in Indus Tower also. And Laurus Labs and M&M we already discussed. So this is about today's HLQ zone analysis. The only learning point is about better way of understanding why we are not trading in 1 minute 9:15 candles. Okay, hope this information will be useful to you. Let's all meet again in our next video. Thank you.